Hi and welcome, my dear students, to SDL Knowledge Hub channel. So if you haven't subscribed us, please do subscribe and also share those videos for the benefit of other children and also give your valuable comments. Today's lesson we will be looking at the petty cash book. So let's move into today's video. First, we will look what is a petty cash book. Petty cash book is a prime entry book which records petty cash transactions. So, what are petty cash transactions? These are payments which are small in value and occur frequently. For example, for petty cash expenses includes like postal charges, traveling expenses, cleaning expenses, entertainment expenses, stationery expenses, etc. And the source document used to record the petty cash payments in the petty cash book is the petty cash payment voucher. So at the time of making the payments, petty cash payments, the petty cash payment voucher will be raised. The petty cash book is maintained by the petty cashier. Petty cash interest is the specific amount of cash given to the petty cashier by the main cashier to make the petty cash payments. Now, how this petty cash interest is decided by the management is based on the value and the volume of transactions for a period of time. Reimbursement of petty cash interest. The amount of cash given equivalent to the amount of payments made at the time petty cashier is requesting cash from the main cashier. Also, if there is any increase in petty cash interest. So this is known as reimbursement of petty cash interest. So if there is no increase in petty cash interest, then we can say petty cash expenses will equal to the petty cash reimbursement. So based on this, we can also say petty cash interest is equal to the reimbursement of petty cash and the cash in hand. Increase in petty cash interest. Now if the volume of transactions increase, then the petty cash interest may not be enough to meet the demand. So therefore the management could decide to increase the petty cash interest. So the additional amount granted is known as the increase in petty cash interest. So after the first additional amount being granted, then the new petty cash interest will be established. We can see the relationship between the increase in petty cash interest and also the new petty cash interest with the other constituents of petty cash. Increase in petty cash interest equals new petty cash interest minus old petty cash interest. Or we can say increase in petty cash interest will equal to petty cash reimbursed minus petty cash expenses. Then we can also see the relationship between petty cash interest and other constituents of petty cash. New petty cash interest will equal to petty cash reimbursed plus the cash in hand. Or the new petty cash interest will equal to petty cash expenses, increase in petty cash interest plus the cash in hand. Now let's look at a question regarding petty cash interest system. So by answering these 5 questions with the sub questions also, you will be able to test your knowledge about the petty cash interest system the relationship between different parts of this petty cash interest system. So let's look at the questions and try to figure out the answers. The first question is to find the petty cash interest. So the petty cash interest will equal to cash in hand plus the petty cash expenses. So cash in hand is 650, petty cash expenses 2350. So the petty cash interest will be 3000. Question number 2 is what is the petty cash reimbursement? So the petty cash reimbursement will equal to the value of petty cash expenses if there's no petty cash interest increase. So in this instance there's no increase, so the petty cash reimbursement will equal to expenses, that is 2350. The third question, if the petty cash interest was increased, then what is the value of reimbursement? So this increase was by 1000, so then the reimbursement will be petty cash expenses plus the increase in petty cash interest. So 2350 plus 1000 is 3350. Then you asked in part B, what is the value of the new petty cash interest, which is 4000, that is based on initial petty cash interest of 3000 plus the increase in petty cash interest. Then we are said, if the petty cash balance was 525 end of February, what would be the reimbursement? So based on the new petty cash interest, so the reimbursement will be 3475. So that will come based on the new petty cash interest minus petty cash in hand, which is 525. The new petty cash interest is 4000. Then the petty cash expenses for the period will be same as the petty cash reimbursement because there is no increase, which is 3475. So in question 5, disregarding the early increase, if 2850 was reimbursed in January, then we ask what is the increase in petty cash interest. So that will be calculated as petty cash reimbursed minus the petty cash expenses. So reimbursed is 2850, expenses is 2350, so interest is 500. Then finally, question B, the new petty cash interest will be the initial petty cash interest plus increase in petty cash interest. So it will be 3500. Petty cash book format. As you can see in the screen, the petty cash book format, there is receipt column, then ledger folio date, description, voucher number, then payments and analysis columns and other ledger account. So based on this format, we can see that there is an analysis column which states different types of petty cash payments. So in this column, similar types of payments are recorded under each of these expense category. For example, pens, pencils, books will go under stationery, and similarly traveling expenses incurred to go on three-wheeler, on bus, and different travel expenses will go under travel analysis column. And there is also a sundry expenses column. This column, the expenses will be which cannot be included in any of the previous columns will be included under sundry expenses column. Then apart from the analysis column, there is other ledger account. Now this petty cash expenses, which cannot be included in the analysis columns but which are needed to be separately posted to the relevant ledger accounts, are recorded under this other ledger account column. Like the cash book, the petty cash also performs the dual function. So that means it functions as a prime entry book and as a ledger account. So if you look at the double entry for recording of transactions in the petty cash book, for petty cash reimbursement and initial petty cash interest, so cash is given by the main cashier to the petty cashier. So petty cash increases, so petty cash book will be debited, and cash in the cash book will decrease, so cash book will be credited. Then petty cash expenses paid in analysis columns, these are recorded in the relevant analysis columns and total, and these totals are then posted to the relevant ledger accounts. So this will be as follows: the relevant expense account will be debited because expenses increase, and the petty cash account will be credited. Then the other ledger account, transactions that are recorded in the other ledger account should be separately, each transaction individually debited to the respective ledger account. Now we will look how to balance the petty cash book. So take the value of the receipts for the total of both sides, the receipt and payment side. That means the debit and credit side. Then find the difference by deducting the total in the payment side. So this difference is the balance in the petty cash book. So this will be recorded as balance carried down above the payment column, and also the same amount will be shown as balance brought forward under the total of the receipt side, that is on the debit side. Now we will look at a question regarding recording petty cash transactions in the petty cash book. So we have been given 11 transactions to be recorded in the petty cash book, and it states the petty cash interest was 3000, which was received on 1st of April. So you are required to prepare the petty cash book using stationery, postage, travel and sundry analysis columns, and also need to draw the ledger accounts. So let's see how we can record these transactions. First, we need to put down the petty cash book format and then record the initial interest received under receipt column on the first date as cash, which is 3000, and then start to record each of the transactions under the respective columns and these columns and other ledger account columns. So if we look at the first transaction, postage charges will be recorded under postage as 140, and this will be shown as payment as 140, and need to put the voucher number and also the date. So likewise keep on recording rest of the transactions in the petty cash book. So when you record these transactions, you will see that refreshments and cleaning does not have separate analysis columns. So these will go under sundry column. So refreshments 320 and cleaning 150 will go under sundry analysis column. And also when we are recording these petty cash expenses, there will be two transactions paid to Sajid and carriage inwards does not belong to any of these analysis columns. So Sajid is a creditor who has been paid. So this will come under other ledger account for 600. Similarly, carriage inwards, that is bringing stock into the organization, the expense include. So this is not a travel expense, but this is bringing the stock into the organization. So that will go in the other ledger account as 250. So record all the transactions in the petty cash book and get the totals for each of the analysis columns and the other ledger account. And finally, by adding all these totals, we will get in the payments column, adding down the total of all the expenses made, which is 2,830. Then we need to balance the petty cash book. So the receipt column total will be the one that we'll use as the total for both sides, which is 3,000. So this minus the payment of 2,830 will be the balance in the petty cash book. So that will be shown as balance carried down end of the month and balance brought forward first day of the next month, which is the value is 170. Then we will also need to record the ledger accounts of these analysis columns and other ledger accounts. So based on the totals of each of the analysis columns, we can record in their individual ledger accounts. Stationery, the total is 640. So stating petty cash, we record at the last date of the month and then balance the ledger account. Same way, the postage account is also recorded based on the total of 180 as petty cash on the last day of the month and then balance the postage account. Similarly, for the other two analysis accounts, travel and sundry account can also be recorded in the same way and balanced. Finally, we need to record the transactions that are recorded in the other ledger account. So these transactions should be recorded individually in their ledger accounts. So we open an account for Sajid and record 600 as the petty cash payment and balance the account. Similarly, the carriage inward account record 250 as petty cash and balance the ledger account. So my dear students, hope you got a good understanding about the petty cash book. So if you haven't subscribed us, please do subscribe and also share those videos. So until we meet again with a similar video on O-level accounting and business studies, bye for now.